Crypto holds on to key support levels despite stocks trading lower. On-chain data shows that some pain may still be needed before the bottom is in. And longer-dated Ethereum upside and Bitcoin wings find a bid. All this and more in this week's Crypto Insight. Okay, so crypto this week. Welcome back to Crypto Insight. So if we look at kind of Bitcoin chart, it's actually done relatively well, right? Risk assets have been pretty weak, as those on the macro call just now will know. And I would say versus the correlation that we typically see versus the beta that you would typically see in crypto, Bitcoin holding above 38,000 is a bit of a result for the longs. Yeah, I would have actually expected that level to have been broken down, and it hasn't yet. So, you know, I'm still favoring a downside break at some point, but that's because I'm bearish on equity markets overall. Now, in the super short term, we may well get a bit of a post FOMC bounce in risk, and that could like even get us back up to sort of 40 to 42K in Bitcoin, back to the top of this range that we've been in. But obviously, you know, more medium term, that's probably a reasonable selling opportunity or a chance to buy some put protection if you haven't already done so. And then to the downside, clearly, if that level breaks, then we got some room to run, right? Next kind of major support level somewhere around that 33, 34K area. And then we could even get as low as 29 to 30K at some point in the summer, right? That's the scenario that I'm kind of running with right now as my base case, which doesn't make me want to step in and buy any meaningful amount of crypto here, basically. Yeah. There hasn't been a ton of fundamental stories really to drive things. We've just kind of been following our macro risk asset correlation and stuff. The biggest thing has really been the vol. The vol just continues to get sold to the market. And so that's realized vol has just remained very, very low in crypto, but we'll talk about that in a bit. If we look at Ethereum, yeah, it's kind of broken down this support level around 28.50, but it's hanging around there. If this level does, if we don't get a bounce soon in risk assets to take this thing back above 3,000, then this thing has got legs down to maybe 25K before it finds some real support. So be careful on that. If you look at the ETH Bitcoin cross, kind of consolidating, you know, nothing to really panic with there. That's quite well behaved, right, from what I'm seeing. And it's because of that narrative within Ethereum, right, that people are still going after, thinking that if we get a crypto bounce, then that's the thing that's really got the upside and the beta. So people would rather buy that than buy Bitcoin right now. Yeah. Some funny shenanigans going on in Ethereum with the transaction fees as well last week. Some stuff going on in the metaverse tokens and I think in the NFT space. So fees went from like $10 to $200 on Ethereum, which pissed everyone off who basically was involved in NFTs and doing those transactions. But the reality is when those fees jump, more tokens get burnt, right? So in theory, that's actually good for the price of Ethereum, right? Not the Ethereum price really rallied that much, but just to be aware that those transaction fees are getting bubbly or did get bubbly again, that might end up being a short-term price driver, okay? So that's what I'm seeing there. Solana also, if we have a quick look at Solana, not doing great at the minute, kind of, you know, finding its way back towards that support level where it bottomed out and kind of consolidated for ages since January in around the 80 level. So, you know, for those of you who like Solana, maybe it's providing some half decent entry, but like I say, it's going to be pretty correlated to everything, right? So if you're not buying Ethereum here, probably not buying Solana here either, to be honest, right? So that's kind of look at it. Now, at some point when we want to get long this stuff again, I think owning call spreads, things like that in Solana will offer really quite good leverage, because we saw in that run up when they were integrating with OpenSea, the pace of the move from 90 to 140 was ferocious, right? So Solana, when it wants to go, it can do some crazy stuff, right? So it's just a case of waiting and kind of letting that price action confirm to you that another up leg is underway. We then have a look at the on-chain metrics. what did I take away from Glassnode this week? So, you know, they kind of show here in the top left that, you know, where a load of Bitcoin has kind of been accumulated. Okay. So, you know, they're basically pointing out that a large amount of accumulation happened between 33 and 42K. Okay. And, you know, if that's the case, and then they compare kind of the unrealized losses, right? And they compare how big do the unrealized losses of all of the holders of Bitcoin or whatever need to be for a capitulation event to have occurred, right? So they're just using that metric, okay? So the idea being that you would need about another 10% of supply to move into unrealized loss to be consistent with previous capitulation events, okay? And to get the price level to get that 10% of supply into unrealized loss is around 34K, sorry. Yeah. So that's kind of where they would see, you know, some similarities to the setup of previous capitulation events on that basis, on one of the metrics they look at. Okay. Then they've got on the top right, you can see long-term holders and what they've been up to. So whilst long-term holders for months have been relaxed and not panicking or whatever, lately we've seen a bit of an acceleration of selling from long-term holders. Okay, so these are people that are basically got spooked by the macro picture, have owned it for over a year, let's say. It's kind of gone nowhere for them, and they're just getting out of their break-even point, basically, right? So selling at around the 38K level, which is the zero profit. That's kind of the cost basis of this cohort that's been selling. So they're just basically, you know, breathing a sigh of relief and saying, you know what, that's our trailing stop where our entry is. Didn't work out. Let's just get out for now, basically. Now, those long-term holders probably come back at lower levels, but right now, I mean, it's similar to myself, right? I got in summer 2020, made a load of money, was planning to be in this game for a long time, have a long-term bullish view, but I'm very, very cognizant of the macro picture and the fact that crypto is not going to completely escape from it, right? So now I could just liquidate all my crypto, or I could put hedges on. Some people, long-term holders on chain, are choosing to just liquidate. Other people like myself are choosing to put on protection trades within the option space, right? That's all it is, basically. And it's a very reasonable thing, because, you know, once we get price confirmation that the rally's on again, then fine, we can do stuff against it. But for now, you kind of feel a bit naked without some protection against your crypto, I would say, given the macro backdrop. Okay, and then the last thing, the two charts underneath on the bottom are talking about that the actual Bitcoin price, looking at other valuation measures, and they've got a ton of valuation measures that they look at, is looking relatively cheap now. Okay, so if you look at the price relative to transaction volumes and you compare that to historics, that's quite low, right? So that doesn't suggest the price is frothy here. If you then compare it to this Mayer multiple, where they look at the 200-day moving average and 80% of that as a price level, and that's a price level of support that has actually been in place for a very long time on Bitcoin, we're already at that level. We're already at 0.8 of the 200-day moving average, right? So it's kind of like, how much lower does it need to go compared to now? I don't think personally this measure's that scientific, right? So I don't put a lot of weight on this measure, but it is something that people look at. So I just thought it'd be worth flagging. Yeah, but you know, I could definitely see an overshoot here to like way below 0.8, because obviously if it's already at 0.8 and we see could easily have another 10-20% downside, then that would be quite a big drop in terms of this, and it would be quite an anomaly in terms of where this thing has got. But you do see overshoots, right? You saw an overshoot in 2018, you saw an overshoot in 2019-20, right? So it is possible. Yeah. Okay, but it probably won't last for long, right? I think that's probably the takeaway, is that if you get the overshoot from these type of levels and you get the risk of panic where everyone's just dumping everything and this thing does go to silly levels, the snapback will probably happen quite quickly, right? Because there'll probably be a bit of dry powder out there to step in and buy it, basically. Yeah. All right, so those are my key takeaways from on-chain, right? If we then go to vol, so realized volatility, Bitcoin not really going anywhere, kind of hanging in at around that 50 level on realized, whereas if you see what Ethereum realized kind of in grinding up from 50 all the way back at above 60, basically, right? So Ethereum putting in a little bit more on the realized side of things. And that kind of makes sense because, you know, it typically trades at higher implied vols, and that is just justifying its higher implied vol, right? Typically trades, you know, a good 5 vols, if not more, over Bitcoin. And that kind of realized vol down at 50 was probably a bit of an overshoot. And now it's kind of going back more towards fair, basically. Yeah. But then if you look at, you know, the spread between implied and realized, it's actually pretty close to 0 on Ethereum, whereas it's about 4 vol points in Bitcoin. So from a gamma perspective, the gamma that is still the cheapest is Ethereum, even though it's trading, you know, 5 vols over the implied vol of Bitcoin, because you've got to compare it to its realized, right? So the risk premium or the volatility premium implied versus realized is much narrower right now in Ethereum than it is in Bitcoin. Okay, so that would make you a buyer of Ethereum gamma on a relative basis. Yeah. If you then look at term structure, typically we're seeing steepening both on Bitcoin term structure and Ethereum, but we're seeing it in different ways. So the term structure steepening that you're seeing in Bitcoin is coming from, you know, anything June and earlier is getting sold, right? It's not getting crushed, but it's coming down a little bit, right? And the back end stuff is kind of holding to very slightly higher. Okay, so you're getting this pivot from a flatter curve to a steeper curve with the front really going down. Okay, and that makes sense because realized is quite low. People need, you know, you just had a big expiry in terms of April expiry. Quite 20% of open interest was on that. So people are then going to replenish those shorts to earn that income and earn that yield on longs. People are going to replace that with shorter dated options. So it makes sense that you should see that stuff come under a bit of pressure post a big expiry like that. Yeah. On the flip side, Ethereum's not seeing that, right? So whilst you're seeing a very little bit of pressure on the front end in this kind of May bucket, you know, anything sort of July, September, December, that's caught a bid. So that's up about 4 vol points. Okay. So again, kind of we're saying, you know, people are more bullish on Ethereum, and around the timing, it's all about the merge and Q3, Q4 timing. So if they're going to buy calls in anything, it's going to be in Ethereum, and that's giving you a bit of a bid to that part of the curve, basically, right? So you're seeing steepening. You're seeing steepening driven by long Vega and buyers in long end Ethereum. You're seeing steepening by short-term sellers in Bitcoin. But essentially, the curves are all getting a bit steeper. Yeah. So that's what we're seeing in term structure. If we then look at the actual at the money vols per expiry and kind of how they're evolving, right? So another way of looking at the term structure, but as a time series and how it's evolved, right? So I just thought this was very striking. That, like, looking back at the chart about 2 weeks back, you've got these circles that I've highlighted, right, where the curve steepens aggressively into the Friday, Saturday period, basically, right, which is which happens to be the DOV auction period, right? So you're seeing like all the lines widen out, and the pink line being the 1 week, the blue line being the 1 month. So those vols are getting particularly crushed. The long-term vol doesn't move that much. All of the other maturities start to drop like a stone. You head into that DOV auction, maybe the Saturday after it, the day after it, and then you start to come out of it and it recovers. But it's pretty, I mean, it's pretty amazing how cyclical it has become, that how this term structure just get battered into the Friday bounces, battered into the Friday bounces, right? So it's becoming a quite strong pattern that you want to be aware of, so that if you are a buyer or seller of options in crypto, then you lean on that cyclicality, basically, right? So you kind of use that to know when you should be buying stuff if you're a buyer, or know when you should be selling stuff if you're a seller, basically, right? So that's all I would say. Yeah, just be aware of that cyclicality, because it seems to be quite dominant and quite strong at the moment in the absence of any other game-changing news. But even the irony is, even with equity markets and risk assets selling off, that cyclicality was there, right? And it's very, very apparent if you look at the curves. Yeah. Then if we look at skew, so on the skew side of things, we obviously priced in, so this is going back like a month, we obviously priced in much more put skew, right, recently. So that's repriced higher over the last few weeks, particularly on the front end, as investors look to protect holdings from macro risks, and they're using cheaper options, which are shorter dated options, to have that protection. even though that protection does expire and run out and you just have to roll it or replenish it, people just aren't willing to pay up for too longer dated puts, basically, right? So really the short dated puts are the ones that catch the bid. Yeah. So, you know, both 25 delta skew, both in Bitcoin and Ethereum, you know, widened out quite dramatically to about 15 vols for puts. But then if you look, the kind of only noticeable difference would be that the longer term, like the 6-month stuff in Ethereum has bounced back a bit from its lows, right? So that's starting to move back to much more back towards neutral, as obviously longer term bullish buyers of calls come back in, right? So that's going to have a bit of a, it's going to be a bit two-way, I would say, the flow in the longer term part of the Ethereum curve, because there are some buyers there, whereas, you know, everything else, it just seems like Bitcoin, it seems like they're happy to sell calls across the whole curve, and they'd rather own puts basically as a macro hedge. Yeah. So that's what we're seeing there in terms of skew. And then lastly, if we look at the option flows, you can see what the dominant option flows were last week. In Bitcoin, what do we have? We had strangle sellers in May. That's been quite a common piece of flow that we've been seeing recently. So, you know, that's still there. Shorter end vol, you know, whether it's against DOVs or whether it's just generally people looking to make money because it's not moving. That is a flow that has been popping up like for a few weeks now. And then the really interesting one, the kind of slightly different one that we've just started to see is people buying wings in September. So in Bitcoin, they're doing it in September. And the way they're buying wings is they're selling, so they're doing put ratios and call ratios, but they're selling them, right? So on the upside in September, they're selling 60,000 strikes to buy 3 times the notional of the 80,000 calls, right? So they're saying, I don't want, you know, to spend any premium. It'll be a premium neutral-ish kind of trade, but I want to get a load of volatility exposure in September if Bitcoin moves up significantly, right? So I'm buying the tail, okay? And that's quite a sensible, quite a smart trade, right? That's the kind of trade I'd expect someone like QCP to be doing, because what you're doing there is you're buying convexity, right? And what that means is when vol's at a low level, right? 6-month vol's low. We know that if you read the Genesis Vol newsletter, you know, it's quite cheap, right? But you can buy it and sit there and watch it bleed because it's not realizing, or you can buy structures like this. They've also done the same thing on the put side. They've sold the 35K puts to buy 4 times the 25K puts. Okay. So you do these structures, you're relatively flat Vega, you're relatively flat premium. Okay. But if vol goes up significantly from, let's say, 50 to 80 again, what happens is the Vega on your wings goes up significantly more than the Vega on your closer strikes, okay? And so you kick into a load of long Vega as the vol's going up. So that's what we mean by convexity. Those type of structures can contain convexity. So you do have to pay a little bit of theta for that, a little bit of premium for that. But the idea being that because vol's at quite a long-term low, so the low end of the long-term range, it's not a bad idea to start shipping in some convexity trades like this, which will then benefit from a decent move back up in vol at some point over the next 6 months, right? So that's kind of how they've chosen to implement that, the view that vol's probably quite low now, yeah? If we then look at Ethereum, similar flows, short dated selling, 1 week, 2 week type stuff, as opposed to 1 month. That's coming on Ethereum. You know, strikes 25 to 27K on the downside and 32 to 35K on the upside. Generally, that's where all the gamma settings going on. And similar thing, rather than doing the put wings in September, they've not bothered with the put wings on Ethereum, and they've just done call wings on September and December. So same story, selling strikes in the 3 to 5K region to buy strikes in the 7 to 10K region in September and December, right? Same sort of story, trying to get exposure to, if you get a massive re-rating up in Ethereum above 5,000, vol's probably going to be a lot higher as well. And those convexity trades are going to kill it basically, right? So that's what I think those structures are chasing. And I'm pretty sure it's like some sophisticated vol player, vol arb type player who used to trade equity derivatives probably doing it, right? If I had to guess, yeah. Okay, and yeah, that's pretty much it then. You know, we mentioned power perps and things like that last week. those things are still out there. Like I said, they're building liquidity, they're getting bigger. But right now I'm not touching them. I'm waiting for them to get much better liquidity and much better price transparency. And then I'll probably start to have a look at those and maybe think about, you know, doing the occasional trade on them. But right now I'm quite happy with sticking to what I'm doing in vanilla space. Yeah. All right. That's it for crypto. Thanks for watching, guys. If you like this content, please subscribe to our channel, give the video a thumbs up, and hit the notification bell so you don't miss out on future videos. To watch the entire macro call, which includes the live Q&A and a walkthrough of all my top trades, you can sign up for a free trial to Macro Insight. If you join our exclusive trading community, you'll get access to our Telegram group, and you'll also get weekly market reports summarizing the macro call. The link is in the description to the video. And for more information, you can connect with us on socials, or you can visit our website, options-insight.com. Thanks a lot.